Hello and welcome. My name is Jonathan Stav, and here at Sectors Made Simple, we have over 200 hours of educational content and investment resources to give you the knowledge and tools you need to invest simpler. Today, I want to introduce you to one of the easiest ways to compare the performance of two different securities: relative strength. Relative strength is something that we can use with all different types of stock charts, but today we'll talk about relative strength using a type of charting known as point and figure. With that said, let's take a look at the information that we'll cover in today's video. In this video, we'll cover why relative strength is worth learning about in the first place, what relative strength is, how relative strength is calculated, and finally, some examples of how relative strength can be used. Before we get into what relative strength is, let's talk about why we should even learn about relative strength. And the answer is quite simple. One of the most common challenges that we'll face as investors is trying to decide between two different securities. And there are many ways to try and solve this problem. One might be fundamental analysis, or looking at a company's values to understand which one is the better buy. This might include things like how much profit the company is making, how the company's profits or their earnings compares to the share price, and more. But company fundamentals don't always connect to a stock's price, and very rarely do they connect to how that stock's price is changing over time. For that, we might want to look at technical analysis. Technical analysis allows us to look at how a security's price has changed over time, and we can compare two different securities using technical analysis by putting them both onto the same chart and looking at over the same period of time which one has created more returns. But even this isn't perfect. Because for one, you might find that the stock's prices are wildly different. So if you're comparing a stock that's $10 with a stock that's $1,000, it's really hard to put them onto the same chart and to be able to see which one is doing better. But also, we're going to run into a problem where it's going to be a little bit tricky to try and decide, because if one company is doing very well right now, but another company was doing better 6 months ago, and they have right now the same returns, which one's the better buy? The one that did better 6 months ago, or the one that's doing better today? All of this becomes a little tricky for us to be able to understand, and there needs to be a better way. And relative strength tries to give us that better way. Let's now talk about what relative strength actually is. In simple terms, relative strength is a way of comparing the prices of two different securities. But to use a little bit better of terms, relative strength is the way of comparing the price of one security compared to another security. And I put a lot of emphasis on compared to, because that is what differentiates relative strength from other ways of comparing the prices or returns of two securities. While you might use two different stock charts or plot two different prices on the same chart for other types of technical analysis, relative strength instead tries to combine the two prices into one single value and allows us to plot that value over time to see how it is changing as the market evolves. That value that I was talking about is literally just a ratio. It's the price of one security compared to the price of another, and we can compare and track that ratio over time to see how it has evolved and which security is doing better or worse in any given moment. Again, this can be done with any different type of stock chart, but we're going to choose to use point and figure for a couple main reasons that we'll get into when we talk about our examples. But for now, let's summarize what we know about relative strength. It is a way of comparing two securities in one chart, where that value that we're tracking is simply a ratio of the price of one thing compared to the price of another. Let's now take a look at how we would calculate that relative strength ratio. When we want to calculate relative strength, we can think about it just like a simple division problem in math. We have a numerator on top and a denominator on the bottom. The numerator is going to be the security that we want to look at. The denominator is going to be the security that we want to compare it to. So going back to that phrase that we said earlier, it would be we are looking at the price of the numerator compared to the price of the denominator. We can find this relative strength ratio by just doing some simple division. Take the price of the numerator and divide it by the price of the denominator. And that gives us a value that we can track as it changes over time. When the value of that ratio is increasing, that means that the price of the security that we're looking at is improving compared to the price of the other security. If the value of that ratio is decreasing, that means that the value of that security is worsening or is losing value compared to the other security. Before we get into some ways that we can use relative strength, I really quickly want to remind you that if you're enjoying this video, we really would appreciate a like on this video or a subscription. These little things do go a long way to helping us understand what you want to learn more about in the future. With that said, let's get into talking about how we can use relative strength for our investing. This is where we get into the fun parts, when we start talking about how we can use relative strength to decide between two different securities. Again, we can use any type of stock chart that we want for this, but today we'll focus mostly on point and figure. The reason that we focus on point and figure is we're going to take advantage of some of the things that we covered in our point and figures basics videos. Most importantly, the fact that point and figure cuts out a lot of the noise of charts. When we're looking at relative strength charts, there very likely will be periods of nothing, where very little or nothing happens at all, and we don't want to think about that, and we don't want our chart to be kind of muddied by all of these periods of very little action. Instead, what we want to be able to focus on are the trends, where one security is improving or worsening compared to the other, and point and figure allows us to do that. Point and figure also offers us some very unique ways at looking at how performance between two securities is changing in the short term and in the long term. If we're looking at a point and figure relative strength chart, we can try and use the direction or the columns of X's for uptrends or O's for downtrends to decide which security is doing better in the short term. The reason that we consider this to be the short-term indicator is because all it takes is a reversal of direction in order for that signal to flip and tell us that one security is now doing worse compared to the other. For more long-term strength, we can look instead at our point and figure buy and sell signals, where one trend goes above or below a previous trend. If you need a quick refresher on that, we do recommend you take a look at our point and figure buy and sell signals video. But for what we're focusing on today, we consider if we see a chart that is in a double top breakout or in any buy signal, that indicates that the security is outperforming long-term compared to what we're looking at. And if we are in a sell signal or point and figure double bottom breakdown, we consider that to be the security is doing worse long-term compared to what we're looking at. But there's one little thing that I want to mention, and this isn't a rule so much as it is a preference that we want to share with you. When it comes to looking at point and figure buy and sell signals, the words buy and sell lose quite a bit of meaning when we look at relative strength. Relative strength is not a price, it is a ratio. So using the words buy and sell for a ratio seems a little strange. So instead, when we talk about our point and figure buy signals for relative strength charts, we prefer instead to use the term positive trend, or we abbreviate it to be pos trend. Whereas for negative trends, those will be our point and figure sell signals. But let's now take everything that we've learned about and apply it to an example. Let's compare a relative strength chart between Apple and Microsoft. When we're comparing two securities, the way that we try and put that into words is by putting the first ticker symbol, a colon, and then the second ticker symbol. So, for a relative strength chart between Apple and Microsoft, we would have the ticker symbol for Apple, AAPL, a colon, and then the ticker symbol for Microsoft, MSFT. We now need to find the prices for these two securities. For our example, we're going to use the price of Apple as $153.85 and the price of Microsoft as 271.32. If we divide the price of Apple by the price of Microsoft, that gives us a relative strength ratio of 0.5670. Now, we could plot that number on a chart, but those numbers seem a little strange when we start using point and figure. We like to have a little bit of bigger numbers for us to be able to look at when we're using point and figure charts, so to make the number a little bit more manageable, we're going to multiply it by 100, giving us 5670 as our relative strength ratio between Apple and Microsoft. If we looked at the point and figure chart for this relative strength, we'll see something that looks a little bit like this. Again, 5670 is where that ratio stands today, but that has changed over time, and this chart shows us how that ratio has evolved throughout the past few months. What we find is that this chart is currently in a column of O's, indicating that the current direction is negative, or turning it into English, we have Apple currently underperforming compared to Microsoft in the short term. However, if we look at our point and figure buy or sell signals, we find that currently this chart is in a buy signal, indicating that we are in a long-term positive trend and that Apple is doing better than Microsoft long-term. But if we look at where our current column of O's is, we're starting to inch closer and closer to a double bottom breakdown, which would see a reversal in that long-term indicator, flipping us into a negative trend and indicating that Apple has lost long-term strength compared to Microsoft. Now, the interesting thing about relative strength is we can flip these two securities and get a new unique chart. So we can take Apple compared to Microsoft and flip it. So now that we are looking at Microsoft compared to Apple. And it's worth noting that these charts might not show opposite results, even though the securities have just been flipped. Let's take a look at what the chart for Microsoft compared to Apple would actually look like. On this Microsoft compared to Apple relative strength chart, we find that the chart is in a column of O's, indicating that Microsoft is doing worse than Apple short term. But we see a very clear point and figure buy signal, indicating that Microsoft does indeed hold strength over Apple in the long term. So, what does this mean? Does it mean that the Microsoft compared to Apple chart is correct and that the other chart is wrong? Because if they're not opposites, how do we decide which one is correct and which one is incorrect? Well, the simple answer is they're both correct, and these charts don't necessarily have to agree. That, in fact, is one of the biggest benefits of relative strength. For every comparison, you get two different opinions of the data. You get the security A compared to B, and what that short-term and long-term indicators look like. But you also get B compared to A, and what those indicators look like. Sometimes they'll agree, which gives you a little bit of that extra pat on the back, indicating that what that data is showing has a little bit more significance. Or you might find that they disagree, which leads us to have a little bit more caution in trying to use whatever those findings are to make a decision. So not only do we get short-term and long-term leadership, but we have a way of checking our work to see if these numbers agree, or if changes are happening right now that is creating a little bit of uncertainty in terms of which one of these securities is actually the leader in the time frame that we're looking at. There's one last note that I want to mention when it comes to relative strength, and that note is in fact in the name of the charts, that these charts are relative. Just because one security is in a positive long-term trend compared to the other doesn't mean that that security is generating profits. It's possible that two securities can both be generating profits, but its relative strength chart could be negative or in a column of O's. Just as likely as it is that we have a relative strength chart that is in a column of X's, even though both securities are losing value. Relative strength doesn't care about absolute profits and losses. All it looks at is how the price of one security is doing compared to the other. We've covered a lot of information today, so let's quickly summarize what we've learned about in this video. We learned that relative strength is a great way of comparing two securities and, more importantly, comparing their prices and how their prices have changed over time. Relative strength is based on a ratio of one price divided by the other, and we try and track leadership in short term and long term by looking at how this ratio changes over time. While relative strength can be used for any type of chart, we choose to use point and figure because point and figure makes it extremely easy to cut out periods of little activity and instead focus on that short-term direction in terms of columns of X's and O's and its long-term trend, with positive and negative changes being represented by point and figure buy and sell signals. Lastly, while relative strength is a very valuable way to compare securities, we have to remember that it is relative. And just because a chart is ascending in a column of X's doesn't mean that it's generating profits. Two securities can be profiting and have the chart be negative, whereas two securities could be losing value and have the chart be positive. So whenever you're looking at relative strength, it's always important to go back and look at that securities chart as well to make sure that the results that you're seeing in relative strength match up with your expectations for the stock's price or any security's price. Thank you all so much for watching this video. We really hope that this information about relative strength is something that you've found interesting and can apply to your investing. If you're interested to learn more about how investing can be made simpler, we recommend checking out our website, sectorsmadesimple.com. There, you can make a free account and get access to over 100 hours of different pieces of educational content to teach you more about investing, the world of stocks, the economy, and lots more about sectors, ETFs, and of course, relative strength. So again, if you're interested, our website is sectorsmadesimple.com, and we look forward to working with you in the future to make investing simpler.